Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. India's economic growth fell to 6.1% in the fourth quarter of 2016-17, primarily because of demonetization adversely affecting economic activity. This was at least a four-quarter low. The sectors worst affected were construction and financial services. Without indirect taxes, growth figures would be more dismal. Gross value added, the difference between gross domestic product and net indirect taxes grew by only 5.6% in Q4, the lowest in at least 8 quarters, according to official figures released on Wednesday. Now, the effect of demonetization was evident in the figures, with growth being pushed primarily by agriculture and government spending. In Q4, excluding agriculture and government spending, GVA grew a mere 3.8%, down from 8.4% in Q1. On this edition of The Big Picture, we will analyze the Q4 numbers and also take a look at the challenges for the government to spur growth. Joining me on the program today are Nitin Desai, former Chief Economic Advisor, Government of India; Subhomoy Bhattacharya, Consulting Editor of the Business Standard; Ajay, former Secretary, Ministry of Commerce and Industry; and Professor Lallan Prasad, former Dean, Business Economics, Delhi University. Thank you to all my guests for joining me on this edition of The Big Picture. Mr. Desai, I'd like to begin with you. The Q4 numbers are finally out now. Now, can we assess what the damage really was as far as demonetization was concerned?
I certainly think so. I think it's not at all a surprise, these numbers. What was really surprising were the Q3 numbers. And the Q3 numbers looked much better than where people would have expected. But it is possible that the real impact of demonetization was felt after a month or two, because initially, of course, as far as production is concerned, it would have continued. It's a little later that you saw the impact of the shutdown of small enterprises, etc., etc. I think this was not expected, and yes, it is surely a measure of the price that we had to pay. Of course, our Mr. Bhattacharya has said, congratulated himself, or rather the government, on the fact that for the year as a whole, the growth rate remains 7.1%, because what has happened is, which is in these numbers, they have revised upwards the numbers for Q2, Q3.
Yes.
And that is what has led to the 7.1% growth. So
Sure.
That is not an argument against the impact of demonetization. That is, the 7.1% is largely a result of the lifting up of the numbers in, I think, mainly Q2.
Q2, yes.
Mainly in Q2.
Fair enough. Subhomoy, what are the implications really of these Q4 numbers?
Well, you know what? Let's look at the demonetization thing as not the major reason why the Indian economy is slowing down. The numbers of GDP that has come out show that the Indian economy was slowing down from the first quarter of last fiscal. It was a slowdown which was not getting captured in the second estimate, which had happened. It is now getting captured because, and that actually goes to clear up one important misconception, which was that a lot of authorities, without having data or having trawled the data, had unnecessarily castigated the GDP makers for having actually fudged data. I think this will now clarify that there is no such fudging of data that has been going along. And that, I think, is a very important thing to make, that the Indian statistical system is robust and doing well. But moving on to what has been the effect, the Indian economy had actually started slowing down. This is what the GDP figures tell us. From the first quarter, the second quarter, it got accentuated, and by the third quarter, it had visibly started slowing down. So demonetization is not the reason why the fourth quarter figures have slowed down so badly. It is part of the larger trend. What demonetization has done is accentuated the unemployment problem. Basically, you are looking at construction, and as you said, the real estate sector. These are the two sectors which have taken the brunt, which was expected, because these are cash sectors, cash-rich sectors. And that is where the demonetization drama has played out. What going ahead we see now is that the economy has distinctly slowed down from 8% in FY15, FY16. In FY17, it has gone down to 7.1%. And as Dr. Desai has pointed out, This has been held up by agriculture, which is good, and by government spending. Going ahead, do we expect agriculture to record the same almost 5% rate of growth? Despite the monsoon, my sense is that it may not be as high, because it's a mean trend growth rate is something like close to 3%. So if that is so, then definitely that will be a drag.
Sure.
On the positive side, what you will get is that export has now started moving up. So that would be good. But there would be what we are clearly seeing is that the economy now is almost clearly dependent on government expenditure to push up, because private investment has gone down, and that is not again a demonetization story. That is because of the NPA overhang in the economy. That is a 6.5 lakh crore rupee problem, and that requires, till that gets solved, investment cycle returning to the Indian economy will take a considerable amount of time to jog it back to anything close to 8%.
Fair enough. You know, there's so much to talk about, but I'm going to stick to 2 points here. Mr. Dua, you know, if there was no government spending, if there were no good rains and agriculture did badly, then these numbers would have been terrible. I mean, looking at the numbers right now, it's only because of government spending and only because of good agriculture that we are seeing, you know, some kind of a semblance here.
I would totally agree with you, but I would add that a higher level of private consumption has also given a relief to the figures which we've seen in Q4 of 6.1% and 7.1% for the whole year. Had the private consumption not kept pace, it's been faster than the previous year. We are close to 8% increase in private consumption during the current year. That has done its bit. Otherwise, the GVA, the gross value added, which we've explained as GDP minus the net indirect taxes, would have been much lower than 3.8, and 3.8 itself is the lowest in last 8 quarters. The concern now has to be that government expenditure shouldn't slow down, but the government expenditure should not be consumption oriented, because we are worried about the future growth. Its nature has to change. Private consumption, which has been got stepped up somewhat, that also its direction has to change from consumption to gross capital formation. GCF has come down by 2.1% in Q4. Again, we are reaching a stage where it could be lower than what we have seen at any point of time post the Lehman crisis, post 2008. Our concern now has to be really focused on how to step up investment, be it in the government sector or in the private sector, and there good monsoon helps certainly, but how much can agriculture step up our production? GDP is a moot point, because the share of agriculture is coming down year after year. Now it's roughly 14%. So 14% at 4% or 14% at 5% does make a bit of a difference, because agriculture has, you know, forward and backward linkages.
But not the kind of growth that you're expecting.
Absolutely.
Sure.
So it has to necessarily come, to my mind, from stepping up investment and our capital formation moving forward.
Sure, fair enough. Professor, you know, a lot has been said about the sectors that have been done badly after demonetization. You know, the previous speakers also spoke about construction, professional services, as well as you know, the real estate sector. We all know that these sectors have been dealt a body blow. Can they recover?
Yeah. See, the problem is that even services sector has gone down, which is the biggest engine of growth at the moment. I mean, it contributes highest to the GDP growth. And the construction sector and the finance sector and banking, and in all these sectors you find a downward trend. The primary reason of decline, we can't say, is only the demonetization. There are other factors also simultaneously which have been working. As has been rightly pointed out, private investment is sinking, and for the last few years it's not picking up as such. World Bank has come up with a recent report that maybe in the next quarter private sector may be interested in investing more, because investment by the government in infrastructure has gone up very high, and public expenditure has also gone up high. So that may result into further incentive and market may pick up a little in the next quarter. Demonetization has affected this whole phenomena because there have been a cash crunch in the market, and particularly when we look over the construction sector, you might see that a lot of black money have been pouring into construction sector earlier, and that money has been going, if not fully, partly into the construction work, making demand for steel, for cement, for energy, and for almost all those things which our industry are producing. So what you find that 8 core sectors of industry, they are all down during this quarter. That is cement, coal, oil, and energy, and so on. So with core sector industries going down and private sector investment shrinking, the phenomena is bound to be there that the GDP will go down and gross value added has gone down and everything is on a declining trend. But we hope that this may be in the next quarter and so on, some improvement is possible.
Okay, we hope that some improvement is possible. Yes. Is the onus now, Mr. Desai, on the Reserve Bank really to change its monetary policy?
It certainly would help. It certainly would help. If you let's ask ourselves, what lay behind the growth boom that we had from 2004 to 2010? I would say 3 things. It was a boom in private corporate investment, tremendous boom. The share of private corporate savings and investment in GDP doubled in that period. There's a huge, and that generated a tremendous demand for capital goods. Second, there was a boom in rural consumption. This was a period when MRPs were going up, Narega was expanding.
MSP.
Huh?
MSP.
MSP, sorry. MRP is an industrial term, but MSP, support prices were going up, and Narega and so on. So those are, and you see this in the performance of the FMCG companies, which have all recognized the rural demand. And the third thing was a phenomenal increase in export growth. Driven at that time, a lot of it was driven by software, the boom in software exports, which we had from 2004 onwards. Can we count on this now? First, as far as the boom in private investment is concerned, I think it's constrained by the NPA problem, which has been mentioned, and it's at both ends. It's not just that the banks cannot lend or are constrained in lending because of the NPAs. It's also that the balance sheets of the corporate sectors are heavily distorted, and they have liabilities which are weighing them down. But it's also, to a certain extent, the pessimism in the investment climate is driven by a certain pessimism about demand growth. I'm a little involved in front of these, and frankly, even companies which have money and do not have a balance sheet problem are not investing because they still don't see demand growth in sight. Average capacity utilization sectors like cement and so on is around 70–75%. Yes. And at that point, you can't afford to invest because there are too many people who are ready to sell at a discount. Third thing was that we mentioned was export growth. Now here, for the last few months, there have been some positive signs. But will it be enough to drive us? I'd say that if I had to advise the government at this point, I'd say you have to resolve the NPA problem. It is a much bigger and much more serious problem for the future of the country than has been recognized so far. What they have done so far is inadequate. It is not going to lead to the sort of resolution that we ought to be looking for. Right. How to do it is a big story. You'll have to do another program on this.
Indeed.
But to me, if I had to identify one thing which the government has to tackle on an emergency basis, it would be one more point, final one. Remember, we are still going to see a little judder because of the implementation of GST.
Yes.
It is going to. I mean, let's be realistic. It's a very good move to have GST, but there will be teething problems, and that teething problems will translate into some slowing down of the wheels of the economy in some way. It's bound to do it. We are ready to accept it, but it will. So I would not expect a revival of growth that quickly. I would say we would have to wait a few quarters.
So the slowdown is going to continue for a few more quarters.
I think because if the GST comes in as scheduled on 1st of July, I would expect a little slowing down because of the teething problems of the GST, you know?
Indeed, indeed. You know, Subhomoy, the MPC meets sometime next week. Do we see some major stock taking there?
Well, you know, the MPC has taken a very consistent position from December onwards that the demonetization effect is transient, and they have enunciated that in their subsequent statements also. What they have not been convinced about is that the inflation trajectory, because they want to keep it below 4%, that inflation trajectory has really come off the pressures of being high. Now, this is the critical point. The MPC has taken the hawkish position that inflation risks are still high because of the follow through of the pay commission, the impact of several structural problems, plus the fact that the oil prices, which we do not control, could flare up. So given all that, that is when they would be considering whether there's a need to cut back on rates. Now, the the problem is that even if they cut back on rates, would that encourage an investor to go and borrow extra money from the bank? I am not so sanguine, because right now the banks are flush with credit. The banks are also to a fair extent willing to lend at fairly soft rates. But are we getting creditors willing to take up money from there? I mean, borrowers willing to take money from there? No. A classic case is the telecom sector, which instead of being a cash cow has become almost like a liability. So, would a rate of interest dip spur the economy to actually push for higher growth rate? If you also look at the fact the Fed, despite a weak inflation, might actually push the rates, then does it make sense for the RBI to cut rates and to actually create a bit of a currency risk for the Indian economy? So, you know, my sense is that they may not keep a hawkish tone, but cutting of rates is possibly not immediately on at this moment.
Okay, fair enough. You know, a lot, Mr. Dua, has been said about government spending, and you know, when you're talking about growth, how much, you know, till when does this go on? I mean, you can't keep ensuring that growth goes on with government spending. You need some kind of a private boost as well.
Certainly. But we have to reckon with the fact that there are issues about stepping up to any appreciable extent the private sector capital formation or investment. Capacity utilization, there is enough capacity there. The issue about interest rate, and how much does interest rate really impact the overall economy? We have to keep in mind that is by and large the formal economies, borrowing rates, etc., get affected, not most sectors which are outside that. And then this question about the role of the private sector is to a large extent going to be determined by what exactly the government does on ease of business and all those kind of issues which are there. Ease of business applies, we usually look at it in the context of foreign investment, but to my mind, Indian investment in India also faces the same kind of hurdles, if not more, some of those issues as the foreigners do. The ball then comes back to the government.
Yeah.
In the short run, I see absolutely no other option than the government spending stepping up, but its nature having to change from being consumption oriented to investment oriented.
In that case, then we can never expect a growth of 8, 9 or 10%, Mr. Dua.
I don't think we should be talking about that in the immediate future at all. As somebody has mentioned today, saying the 7% is now the normal and we should learn to live with it, and 7% also consistently over time is not a bad figure.
Sure.
Where we are ceding space to China is Q4, because where we have come below 7%, 6.1% and others, but maintaining a 7% rate of growth over a higher size economy, $2.3 trillion compared to what we were 10 years ago when we were growing by 8 to 9% a year, is I think a good achievement. My concern is the government expenditure are we geared up to step that up? And there, three sectors come to mind, of which railways is the most promising one, because no longer do we have a fund constraint in the railways of the kind which was there. Lines of credit by LIC been arranged. There are other people willing to invest. Government support has increased. What needs to be developed is the railways capacity to spend money.
Sure.
And we do need railways as the better cost option compared to the highways and others. Second, we need to accept this fact that PPP in highways of the kind which we saw 7 or 8 years ago is going to take a long time. It has to be where the change has now taken place, saying it's back to the old thing, EPC form of thing. Government spends money, contractors are private sector, and at most what's now being tried out as hybrid annuity model, where a bit of a role for private sector, but government continues to have.
Sure.
And the third sector is the electricity sector, where we are slowing down our investments so hugely by saying that we become surplus. Yesterday I was very happy, delighted to see it's being claimed that 12 states have become surplus in electricity. Yes, you are surplus because there is no demand. You are surplus because the demand has contracted. Where have all the projections of electricity survey of the country gone, not only by us, by outside experts, etc., that India needs to continue to add 5 to 6% to its capacity, in generation capacity. So we have to and there again, we have a track record where the private sector was coming in there, in the electricity sector, not yet in transmission, but certainly in generation, that we could be focusing and ensuring that more expenditure takes place.
Indeed. Professor, what are the challenges really ahead for the government as far as spurring growth is concerned?
That's correct. See, the biggest challenge which I can see at the moment is to create a climate for investment. Because the demand has gone down in several sectors of economy, and the industry is not pouring new money into industry and manufacturing operations. So government has to do things on several fronts. Number one, I should say that our base of economy have been rate of savings, which have been very high, and most of our internal investment have been financed through internal savings. Now that internal savings have to be increased, and for that you have to give incentive to the investors so that they can pour more money into the economy. And the other thing is that government should continue, because we cannot go without government's investment at the moment, particularly in the infrastructure sector, where a lot of projects are running, and they have to continue because most of our future demand which is going to be generated, that will depend upon this. Then we find that some of the work which is going on into government, for instance the industrial corridors, this should be taken very seriously, and they must be completed within time, because the demand that is going to be generated through these industrial corridors, because a lot of new cities will come on these corridors, and then construction work will also go up very sharply. So government should try to concentrate on some of the infrastructure projects which will be generating a good deal of demand in future, and also which will promote investment through private sector. Some hybrid form of arrangement may be had where private sector is attracted to invest money, if not directly as a joint partner, but in some other way. So these areas have to be explored as to how we make investor friendly climate in this country. As far as the foreign investors are concerned, for instance, the government has just taken some step by abolishing the promotion board and things of investment board and other things, and trying to simplify the procedure. But I don't think this alone can do the wonder, because foreign investors also are looking what is the status of demand in the country.
Sure, indeed.
And what is the investment climate in the country. So unless we try to improve on that front, this also calls for that we have to promote more consumption, because unless more consumption takes place, the demand will not take place.
Sure. Those are very valid points that you've raised, of course, and it remains to be seen what really happens. But Mr. Desai, barring the jolts of demonetization, would you say that the government has steered the economy relatively well?
Well, I would say this, now that you've heard the stories of gloom, at least there's one positive side that I would mention, which is our relatively sound macroeconomic situation. India's macroeconomic situation is reasonably sound, both on the external front as well as on the internal front. And I think it is possible for the government to take a few risks at this point in time in terms of giving a boost to the economy. Second, let's not think of 7% growth as low growth. It's a new normal. 7% growth means that per capita incomes will quadruple in a generation.
Sure.
If my children are going to be 4 times richer than I am, I don't think that's such a bad word. So let's generate a reasonable expectation of what we can get. And I think Ajay is absolutely right.
Gone are the days of double-figure growth numbers.
That happened at a time when world trade was booming.
Sure.
You cannot get 10% growth without a booming world trade system. Show me one country which got 10% growth without a booming world trade system.
Be realistic, don't be overly ambitious is what you're saying.
7% is not a bad
Fair
number.
enough. Fair enough. Okay. Subhomoy Bhattacharya, closing comments from you, of course. Where is the growth going to come from?
It has to come from the private sector for the simple reason that if the government tries to expand and spend its way out of it, it's immediately going to hit at that macroeconomic soundness which Dr. Desai has pointed out. Fiscal deficit discipline cannot be breached. The private sector has to take up the slack and has to run. The problem is the private sector in India depends on the government to give signals.
Sure.
That is a political call, and that is something which is gradually being changed. 4 things that have been done: the GST Council, the Fiscal Council, the Insolvency and Bankruptcy Act and the GST, I think are extremely solid measures to put the growth momentum on a very sound footing. And I think that's a good place to start off. If we can take frontier areas like climate change as areas for investment, we've got enough opportunities going ahead. But again, it has to come from the private sector.
Sure. Mr. Dua, your closing comments on the program?
I would think the role of the government, it's not to say that government should crowd out, the private sector. There are sectors which at this point of time, the government, the more amenable to government intervention than before, because of the various reasons we've discussed. But a sector in which the government can play a far greater catalytic role than it has played so far is the real estate sector.
Sure.
Because that is the one which has the maximum forward, backward linkages, the construction trade, employment orientation, highly employment intensive, and I think addressing the issue of land availability, at least for affordable housing, which the government is talking of, making that feasible. Whenever we have seen so many examples, particularly of the so-called tiger economies of South Asia, where it was the housing sector which the government addressed, and that helped sustain the business cycles which all economies otherwise
focus on construction and real estate is what you're suggesting. Yes.
It's also the one area of huge unfulfilled demand.
Yeah. Fair enough. Fair enough. Professor, close the show for us with your concluding remarks.
I feel that there is a need to pump more money for the lower sector, for the people at lower level of economy, because they are the people primarily who will be the engine of growth for demand in this country.
Okay.
If the demand is slacking, it is not only because of the people at middle level or people at the rich level, but people at lower level whose income is very low. And unless government, some of these schemes have gone very well. For instance, in Manrega, now people are getting money directly. So they are getting most of the money which government spends. You see, earlier when Chibbar committee gave a report, and you might be knowing that for giving 1 rupee subsidy, government was spending earlier about 3.46 rupees.
Right.
And the money which was going into pocket of the people was only 46 paisa. So effort has to be made, and the government is making right effort in this direction, that
indeed
money is going
a lot
into
of
the
work
pockets
needs
of
to
the
be
poor.
done. Remains to be seen what really happens in the next few days, of course, but we'll be back with the latest numbers when they do come out and continue to analyze them for you. On that note, I'm going to call it a wrap on this edition of The Big Picture. Nitin, Desai, Subhomoy Bhattacharya, Ajay, Dua and Lallan, Prasad, thank you so much, gentlemen, for joining me on the program and putting things into perspective for us. That's all the time we have. See you again next time.